Hello and welcome to this episode of Talking Global Infrastructure. I'm Simon Montague and I'm Director of Corporate Affairs at the Global Infrastructure Investor Association. Now, what we do is bring together policy, public affairs and communications expertise in an effort to influence governments to create the kind of stable and predictable policy and regulatory environments that work to encourage private investment in infrastructure. And if you're interested in stability and predictability in the world of infrastructure, then wherever you're listening in from, there's one country that's on everybody's mind right now, and that's the United States of America. Because the new Trump administration has reached out further, faster, and perhaps more ferociously than almost anyone expected, with huge impacts on geopolitics, global economics, international relations, and all that means for business confidence and investment. So, what we're going to talk about against this interesting backdrop are the prospects for more private involvement, whether that's investment, partnerships, or professional expertise, in the business of modernising the infrastructure in America. And with me to help are two people who are going to be in this conversation. First of all, Jon. Jon, do introduce yourself.
Jon Phillips here, Chief Executive of the Global Infrastructure Investor Association.
And you've been travelling around the US quite a lot in the last few years, I rather believe.
My first visit to the US on GIIA business was back in 2017 to visit Washington D.C. during what I'm pretty sure was the first infrastructure week during President Trump's first term, that was a really fascinating experience. I think Vice President Pence was a speaker at one of the events there. And so there was lots of razzmatazz and lots of security going on in DC that week. And I've been back many times since, and of course to New York too, where the bulk of our members are based if they have a US office.
The other person who's with me today is David. David, I think you might be claiming even more.
Simon, I do have a few more years. So David Quam, I'm the GIIA's senior U.S. advisor. And I've been in Washington, D.C. since 1994. So a little over 30 years doing federal and state policy in the United States.
With a particular focus on infrastructure?
Infrastructure has always been a key part of my portfolio. I've worked quite a bit, especially with states. And of course, state and local governments in the U.S. own an awful lot of the infrastructure we're going to be talking about.
Let's get on with talking about that. And let's start, if you like, with a state of the nation view. You were both actually in Washington, D.C. in March for the publication of the 4-yearly report card that's produced by the American Society of Civil Engineers. Now, David, tell us more. What is that report card and what did it say?
So this report card has been put together by the civil engineers dating all the way back to 1998. And it grades the status of infrastructure across the United States by sector. So we're looking at bridges, roads, wire, waterways, and really is that engineers look at how is our infrastructure and what's going to be needed to improve it. This year, the grade went up a little bit, but we're still looking at a C grade overall and what I would call some pretty low grade with regard to a lot of different sectors. I know we'll get into that. But this report card has been that weather vane for where does infrastructure stand since 1998. Again, it clearly says we have a lot of work to do.
And how do Americans feel about the fact that after, nearly 30 years now of this report card, on a scale of A to D, US infrastructure is still graded C, and in fact, of half of the 18 categories, it's still down in grade D. What do people think?
Oh, at the end of the day, nobody likes a failing grade or a low grade, and that's exactly what we have. I believe across the United States, everybody thinks strong infrastructure is the core of every community. And so anytime you've got problems with your roads, your rail, your bridges, it causes problems in those communities. I think these grades are reflective of where we are. The United States has old infrastructure, dates back really to the middle of the last century when it was renewed. And it's time for a lot of investment to get us up to where Americans would expect to be leaders in the world and on par with some of the great infrastructure that's been built globally.
And Jon, thinking about what we do here at the Global Infrastructure Investor Association, we're all about getting private finance, private expertise to help modernise infrastructure, to close the funding gap as we talk about, between what the public sector can afford and the kind of funds that the private sector has access to. Now, you'd have thought that the biggest economy in the world would be pretty good at doing that kind of thing. So how has the America ended up in a quite different situation from what you might rationally expect?
The reasons are many and complex, but in my view, and in simple terms, the answer lies in an over-reliance on public borrowing to fund infrastructure. Infrastructure tends to be funded in the US by public debt, which has historically been cheap in the US. But what that debt burden that is gradually been raising over many decades now, the problem with that is that this builds a bow wave of ongoing asset maintenance and operational costs that requires ongoing public funding. And those funds are not always made available in total or even in part through federal or state budgeting processes. Over time, infrastructure falls into disrepair. It doesn't get maintained in the way that it should. And the costs to actually put that right become too great. So that actually all that ever happens is some kind of cosmetic improvement just to keep the asset operational rather than a real fundamental investment in future-proofing it until the asset fails completely, as we sometimes see. And then people wonder why the problem is there. So in simple terms, I think it's an over-reliance on public debt. I think there's another reason which goes alongside that, which is the permitting process in the US to get a project built is incredibly cumbersome. And there are many stories that will often cite about how it actually takes longer to secure permission than it does to actually build infrastructure in the US, which is a pretty frightening prospect. A problem not, by the way, exclusive to the US. It's a problem that many countries face. But so when the engineers, the American Society of Civil Engineers, do their report card, not only do they grade the infrastructure, but they also quantify the scale of the funding gap that is necessary to try and address the challenges that we're talking about. And their latest assessment put the funding gap in the US at $3.7 trillion between what the infrastructure needs are and what the current available funding is. And that's why we at GIIA are advocating strongly for a greater role for private finance and expertise to help deliver that improved infrastructure that US citizens need.
Jon, that's fascinating. And obviously, there's a huge amount of money there. You refer to the $3.7 trillion funding gap that has to be tackled. And clearly, presidents most recently have actually been trying to do something about that. David, let's start talking about Infrastructure Week, because that's going to be happening in the course of May. That's just 2 or 3 weeks from when we're talking about now. It's going to be in Washington, D.C., in your hometown. Tell us a bit more about Infrastructure Week and what it might do to help.
As Jon mentioned before, Infrastructure Week started under the first Trump administration. It happened once a year as proponents of strong infrastructure tried to get a bill moving forward. They were never really successful, so there was some humor attached to Infrastructure Week. That being said, once the Infrastructure Investment and Jobs Act was passed under the Biden administration, Infrastructure Week took on a whole new meaning. How was the money used? What investments are being made? What's happening across the country? It's actually a way to both check in and to look forward to what we're doing. Infrastructure this year has a lot of implications. Where are we with regard to the IIJA's implementation? We have a bill that needs to be reauthorized in 2026. We have a new administration that, of course, is making waves with several different programs. This time, Infrastructure Week is going to be a very important check-in for determining not only where we have been, but where we are going. So I think it's going to be a very heady time.
Who turns up to talk at Infrastructure Week? Who will we be hearing from, apart from, of course, GIIA itself?
We're going to be hearing from the business sector. We're going to hear from state and local governments, every major stakeholder with regard to infrastructure. The private sector, the public sector, the administration, all the major players will be involved in Infrastructure Week and really doing this evaluation of where we are and where we're heading.
And GIIA will be holding its first symposium on the future of funding for US infrastructure in the course of that week in the middle of May. Why are we holding this? What are we hoping to achieve?
I've been going to Infrastructure Week since 2017, and the nature of the conversations have evolved over that time. I think it's a fabulous initiative. Wish other countries did the same, because I think to be able to focus the conversation on infrastructure and its significance to the country in that 1 week really helps to galvanize the different stakeholders with different viewpoints into the same room and talking about the common cause for infrastructure. So I think it's a great initiative. What I think has been missing in recent years is the focus on the funding for infrastructure. I think much great work has been done on the importance of investing in infrastructure and the value that brings to economies and communities, the jobs it creates, and all of that good stuff. Really important. But I think we have to now become a bit more sophisticated in the conversations that are taking place in the US about how you actually finance infrastructure. Because I think it's the case, there's a wide acceptance now that given the scale of public debt in the US, the country just cannot continue to rely almost exclusively on public funding to deliver the improvements in the infrastructure that's needed. There has to be a greater role for private capital in delivering that. Our contribution to that debate is to try and talk about the role of private capital and the expertise of private sector in delivering infrastructure and what needs to happen and what needs to change to give the private sector that enhanced role. And that's the purpose of our symposium, is to gather stakeholders together and investors to talk about what might be necessary to create that additional opportunity for private capital.
So if you're listening and you're somewhere near Washington, D.C, or you can get there, this symposium is going to be on the 14th of May. Jon, I don't want you to give the game away, but is there anything in particular that'll get said or launched at this symposium?
So I think the three big plays for GIIA are the reauthorisation of the Infrastructure Investment Jobs Act, the Inflation Reduction Act, and permitting. So let me come back to each of those. The Infrastructure and Investment Jobs Act released a huge amount of public funding for states and cities to receive or bid for, but it had very little in it for leveraging private capital to help share that burden. And so when that bill comes up for reauthorization in 2026, we want to see a greater role for private capital within that. And we have some ideas about what that might look like. In terms of the Inflation Reduction Act, it's no secret that the current administration is less favorable towards perhaps some of the renewable energy industries that were receiving tax credits. And we understand that there's an ideological difference in that. But actually, we're trying to make the case that we shouldn't be thinking about this through an ideological lens. We should be thinking about this through a national energy security lens, and that the US needs tremendous amount of additional investment in any forms of energy to help deliver on the economic growth ambitions that the country has, particularly on things like AI and data center, which are very energy hungry industries. So what we want to see is a retention of some of those tax credits that have been extremely helpful, I think, in attracting new investment into the US in some of these areas. And then on permitting, previous administrations have attempted to tackle this difficult challenge of how do you strike a balance between speeding up the permitting process to get more projects delivered more quickly, but without alienating communities and those who have concerns over certain environmental concerns that need to be properly addressed. And so no one's advocating, in my view at least, we're not advocating for a bypassing of proper environmental assessment, but there must be ways to increase the speed in which permissions are granted and projects are assessed. And it's clear that the administration shares that view as well. And And I think people are optimistic that President Trump will see through some significant reforms in this sector. So those are the three kind of headlines. And I imagine we'll be talking a lot about all three of those and what can be done, as I say, to try and create this more attractive environment for private capital in the US context.
Fascinating. And David, you're sitting there in the heart of US politics in Washington, D.C. Jon's talked about the need for reauthorization of the IIJA, about tax credits under the Inflation Reduction Act, about speeding up permitting reform. What are the politics around actually achieving all of this? How would you assess the political landscape in which these things need to be done?
It's uncertainty that's been created by a new administration who has a lot of new ideas of how things should be done. With regard to the tax credits Jon talked about, it's possible that some of those tax credits have been targeted to be used to help pay for other tax cuts in other ways. We've seen a move away from like wind and solar and some renewable energy towards petroleum and oil. And how will that play out over the course of both this year with regard to those tax credits is an open question. And then as we get to 2026, when all these infrastructure provisions come up for reauthorization, how is that going to play out? That being said, you're seeing a Congress and some of the committees who have to work on those bills, they've already begun their work. They've put out feelers to stakeholders to say, how do we improve this? How do we move forward? The House Transportation and Infrastructure Committee is openly taking recommendations for the next reauthorization of their surface transportation law. And so this Congress really has an opportunity to be a infrastructure Congress, because it has to take these large bills and move them forward. But the politics are uncertain. There are a lot of different issues on the table, international issues, domestic issues, trade issues, all that could impact what the legislative agenda is moving forward. So it's a uncertain time, but also one filled with opportunity as we move ahead.
We managed so far to resist on this podcast actually getting into the details of American politics, which of course are moving incredibly rapidly. Again, it was almost on the day this podcast comes out, President Trump will have been in power for almost exactly 100 days. But rather than talking in detail about all of the policy announcements that he's made so far, which of course may well change again, I was wondering, David, if you had a sort of take on the sort of cumulative effect so far on everything we've seen in the last 100 days on sentiment towards investing in American infrastructure.
My take is the Trump administration in its first 100 days has been about disruption, about really changing American governance, about the way things are done in Washington, D.C., and really asking some tough questions about what do we need? How can we do it better? Are there things that can be changed? Disruption and uncertainty are very difficult when you're talking about long-term investments like infrastructure, projects that take 10 years to even get done. And so those two do not always marry up. That being said, the president has also traditionally been known as an infrastructure president, as a developer and a builder. And we are seeing from the administration and from even a Republican Congress a desire to move ahead, to build, to invest. The question is, what is that going to look like as we move ahead? So in this first 100 days, there's a lot of uncertainty. I think that raises a lot of questions for investors who have to take that long-term view. However, give it some time. I think this starts to settle down as we get towards the second 100 days and even the second year of this Trump presidency. And as Congress really starts to take a look at what it has to do to get these laws reauthorized.
Yes, we produce a pulse survey every 6 months of investor sentiment towards countries around the world. And funnily enough, the next one will be coming out more or less in the middle of Infrastructure Week. It'll be interesting to see what it does to where the US sits within the overall attractiveness of that market compared with many others. But I think what I'm hearing you say, David, is that if you like, long-term outlook for the US isn't really impacted by what we're seeing at the moment.
That is correct. One administration to another can change their policies, can change their emphasis. The Biden administration was very much about renewables. The Trump administration is very much about oil and gas, keeps that priority status as something that is absolutely necessary for the future growth and prosperity of communities, of states, and frankly of the country. So I think you're going to see a continued emphasis, especially as all these laws come up for reauthorization. This Congress is going to have a chance to put its own stamp on infrastructure moving ahead.
Jon, how do you think things might develop over the next few months? Clearly, the role of the GIIA is to influence governments to create that kind of stable and predictable policy and regulatory environment in which investors feel comfortable to invest. It's drawing in hundreds of billions, trillions of pounds, dollars, euros, call it what you will, into other countries around the world. Where do you think we might be in I don't know, let's say by the end of this year? Not after 100 days, perhaps after 300 days.
I think the task before us is similar to the task before us in all of the main markets, and that is to make the case for the benefit that private capital can bring to the policy agenda that governments of the day are prioritizing. So private capital has to prove its case, show the benefits that it can bring to the table to help deliver on those policy objectives. So our task is to, on behalf of our members and working with our members, to make that case, to show where private capital is making a difference. Take a look at what's happening in the state of New York in airport revitalization, JFK, LaGuardia, and now Newark, all undergoing fantastic redevelopments and transformational investment in airport infrastructure. And that's a fantastic way of showcasing what can be done when the public and private sector work together and bring their own expertise to the task in partnership. We've got to look out for these kinds of examples and show policymakers and legislators what can be achieved, and just continue to encourage them to perhaps just challenge the status quo a little bit when it comes to thinking about how next to deliver the infrastructure project that they may be responsible for, and to challenge them to think, can the private sector have a role here? And if so, what might that be, and how would it be best constructed together and under partnership? Now, David set out the legislative agenda, and we have to work within that to see how we can make the case. But I'm confident that we can. I think there's some great examples out there, and that's what we'll be doing.
Jon, David, thank you both very much indeed. It's been a fascinating conversation, and the United States of America, more than ever, is a fascinating place to watch from afar. And if you're in the midst of it, as David, you are, then there's a huge amount to do to create these additional opportunities for private investors to bring their capital, their expertise to assist in this modernization of US infrastructure. To all of you who are listening, thank you very much. You're listening to a podcast which has featured Jon Phillips, Chief Executive of the Global Infrastructure Investor Association, David Quam, who is Senior US Advisor to GIIA, and myself, Simon Montague. And you can hear more by following the Talking Global Infrastructure podcast on Spotify, Apple Podcasts, and YouTube. You can follow us too on LinkedIn and simply type GIIA into Google, and that will lead you as well to our website. And of course, finally, if you do want to get in touch, just do email us at communications@giia.net. And we'll see you next time. Many thanks. Bye.